Hello guys, welcome back to my YouTube channel Optional Behavior. So today we will be discussing about the known strategy, which is Batman strategy. I mean the conventional Batman strategy is very well known to everyone, but I will talk something about different in which you will see, I mean that strategy will be completely hedged. So in conventional strategy of Batman, right, you will see like both the break evens, although you can get you do get a very wide range, but still there is a possibility of breaking the break evens, and you might see unlimited losses logically, right? So that is something like I would make some changes to the existing conventional Batman strategy to make it completely hedged. Okay, instead of like keeping that both the legs open, which might result in unlimited losses. Okay, so let me share my screen actually. This software. Okay, so if normally if we want to deploy uh, you know Batman strategy, right, on weekly basis, so how does it like work, and how it should be picked up, right? So maybe normally what we do is, okay, for example, like we just go away, like currently you can see the market is for example Bank Nifty is trading at 34,200 or 300, right? So what we will do is, okay, we can go like for OTM options of both the call and put option, okay, and we will buy them, and okay, and we will also sell some of the positions to make it Batman strategy. For example, 34,200, right, currently, so maybe 35,500 if I just move to little out of the many options support, and if I sell this one, right? So normally, I mean, if you understand this triangle, right, so that is what we do in a Batman strategy, okay, by having some credits, right? And even the range becomes very wider, that even in if the market moves within the range like 3 to 4%, you can make the profit in the middle section, okay. So here actually you have to pay a bit more, because uh, the option that that normally the option that is normally sold, right? Oh, sorry, I have uh, so option that is normally sold, which is uh, greater than the number of bought, right? So bought, so that is what it is. So let me just show you with an example. For example, this 35 and 33,500, say for example if we have bought this one, okay, and similarly if I go beyond like 35,000, sorry, yeah, 35,000 itself. So if I take the call option, okay, and I buy this one, so this is what, like, since we are since we are buying some of the options, so what is the normal way of deploying the Batman strategy is, now we'll be selling double the quantity, okay, and so that we can get some credits from both the ends, like from call and from put also, okay. So what I'll do is, since I am buying 135 points, right, so what I'll do is I'll just go like 35 500 call. Let me check if I get the credit. No, so I'll just 35 300, okay. So no, so 35 200, I guess. Yeah, so if I sell this two, okay, and similarly now I will sell 30 33,000, maybe 300 put. Let me check if it matches, or maybe 33,200. Let's make it, okay. So yeah, so this is normal Batman strategy. So although you get a very wide range, like if your spot price is right here, so you'll be seeing like you can see like you are at least safe till 4%, like from downside, as well as more or less 3.5% at the upper side. But what happens is, because of this blue line, right? So even if you are in the green zone, right? But because of this green line, you can see if the option exactly expires at these levels, there is a possibility of making this 10,000, right? But if before the expiry, if the bank nifty moves takes a move at this level, right? So first, instead of showing you giving a profit, right, it will first show you like 5,200, right, around. So this will be the loss on your screen, and like people start panicking. What if it starts breaking down your breakdown and all, right? So that is something what happens. But uh, what if the same Batman strategy, okay, just by shortening the wider range, but still if there is a possibility of making this strategy completely hedged, one that be helpful, right? So that is what I thought of, and I thought like let's make some changes in this convention Batman strategy, and instead we can deploy some completely hedged Batman strategy, in which even you won't be having fear of like if market like opens a huge gap down, right, or a huge gap up, so at least will be at safer side. And although the risk will be there also, right? But here in normal Batman strategy, you will see unlimited risk, right? But there you will find some like limited risk. I mean, it's not like your entire capital is going to wipe out. Okay, so that is something a different one. So normally, if right, so this kind of Batman strategy is normally deployed in low week, so that if the because we can expect the markets to expire within 4 to 5% range. That is a good range actually, right? So in low weeks the market doesn't move. I mean, does not become such wild nowadays. That is as it is. So what happens is you can deploy this strategy in low weeks. So but there is obviously a risk in making this strategy in highly volatile market, because instead of although the market will be definitely trading between 4 to 5%, and since total we are covering 8%, so definitely in a week uh, like market doesn't move so easily, but still there is a fear of showing losses on your screen because of this blue line strategy. Okay, if you know the options, so you can understand this easily. Okay, now let me reset this all, and what I will do is, okay, what my Batman strategy, what I do is, okay, just to make the strategy safe. So what I do is I'll just I try to, okay, what I do is normally I just go by delta. Okay, what I do is I buy the delta of 30. Okay, for example, here I am buying at like 31, right? So this is close, even 31 you can take, or like lesser than that. Okay, so what I'm doing is I'm buying this one. Okay, approximately 28, or within 30 you should keep it. Okay, so similarly from call side also I'll be selecting some 30 delta. So this is what it is, right? So I'll be buying this one. Okay, now what I'll do is I'll sell 20 delta. Okay, but where is that 20 delta? So this is exactly it is, right? So I'll be selling 20 delta 4 lots. Okay, I'll be selling 20 delta 4 lots, and similarly here 20 delta, this is the one. So here also I'll be selling 4 lots. So if you see now, okay, this is not completely done. You will see, oh, okay, means again this is kind of uh, one kind of Batman strategy, but still there is a risk, correct? It is not completely hedged, because in a violent movement of market you can see unlimited risk. So what I'll do is now I'll be buying 10 delta. Okay, I'll be buying 10 delta for both the legs. Okay, So which will be okay, this one. Okay, so I'll be buying 10 delta 3 lots. Okay, so that I'll be balancing my, like buying and selling, both the legs will be equal, right? So, and here also call delta, okay, so 11 or this one, since we're just hedging it, right? So I'll be buying 3 lots. Now see how the graph looks. See, so in worst case scenario, first of all, you're also like making good range, like 3.3%, and here also almost 3%. So altogether like 6%. Okay, 6.5%. So here also you are making a good coverage of, range, but simultaneously you are also hedging your position. In worst case, although there is a risk of losing your money, but at least, right, even if market opens like 5% gap down, you can see, right, uh, because of this blue line, factor, right? So what is like, you are not going to lose that much. And in worst case also, let's consider the market becomes trendy, and it keeps a lower circuit. Okay, so still you are not, it's not like you are just wiping at your capital in downside, and all like upside is, you can see, lesser risk. But anyway, both the sides are completely hedged. So if you think, okay, the market is going to remain in range bound, within 5 to 6%, okay, so you can simply deploy this strategy. Okay, and even you are making like, even if it stays at the at the middle section of, right, so you're also going to make around more than 7.5 thousand, right? Okay, so 7,000 or 8,000 approximately. And if, I mean, obviously there is very less possibility of expiring these options at the age of, the cone, right? So let's not consider like, that option will expire at this, at these two corners. At least there is a possibility of expiring in between these two ranges. So still you're making 8,000 approximately. So what I've done is, right, almost I have tried to keep the same, wider range, but my position is also hedged. Okay, and plus there is one more benefit. In normal Batman strategy, normally what you say is, since you are selling more lots than buying, right? So what happens is, you will have to pay more premiums, right? I mean, definitely that will be a bit costlier one, right? So here, this is like 1,81,000. Okay, approximately 2 lakh, but within 2 lakhs, this is a set of four leg strategies, right? So this is a good one, and at least your position is completely safe. Okay, and even this can also be managed if you know the options and all, and if you have more capitals, and this can be, you know managed also. Okay, if you know the skill. So it's not like whatever the maximum loss that is being shown as per the calculation, that is what you are going to lose. Nothing like that. You can also make this, at least you can reduce your losses. So maybe sometimes you lose, some, but at least market normally expires within 5 to 6% in a week. That is, I mean, that is nowadays the situation is, right? And it's not like market becomes trendy every week or every month. Okay, the market is falling and falling and rising and rising. This happens like in certain situation like coronavirus or something, some war and all. Okay, but still, even in war, a war event, right? So what happens, like market becomes volatile. If it falls like 1,000 points, it rises also 1,000 points, right? So volatility means what? Volatility doesn't indicate the trend, right? Volatility means the market will be volatile. It might fall down 1,000 points, it might rise up, right, 1,000 points. So that is what called the volatility. So if market is falling, it is also having the possibility of rising also, right? So that is what it is. But this is what, guys, I wanted to show you as part of this video. And definitely you might like the enterprise strategy, but I would advise to make the strategy, even the VIX is below 20. so that the market will be less volatile, and you will have higher probability of making money out of this strategy. Okay, but still, if you know the options and all, you can manage even nowadays also. So this is what it is. Okay guys, so thanks a lot, but I would also request to share this channel with your family, friends, and one more thing guys, like my paid services strategies, right? So these are, I mean, those are obviously much better than my YouTube videos. Okay, so there are 4 to 5 strategies which normally I do. Okay, and those are much safer. Okay, and some are weekly, some are monthly. Okay, so definitely those are much better than these ones. So if you're interested, you can simply WhatsApp me on my phone number that will be available in the description. Thank you.